think we're recording. I'm so used to hearing the computer talk to me, but I guess because of the note taking, it already said what it needed to say. All right, so
Neil, I think you actually need to scoot up a little bit. We can't hear you as well.
okay. Is that better?
Yep.
All right, cool. All right, guys, so we are going to get started. Welcome to Tuesday of week 1. We truly appreciate you and your time. All right, I'm going to show you guys my screen. Well, too fast now. All right, guys, here we go. So today we are going to cover the candles, right? Probably one of the most underrated aspects of the chart, right? In my mind, the candles are the data centers of the market. We spend a lot of times looking at indicators, oscillators, everything that's what's going on in the chart. But I would probably say 95% of the time, we're not really paying attention to what's happening with the candles. All right, so that's what today's presentation is going to be about. Because without the candles, nothing moves, right? So first, as always, if you know me, there's always going to be a disclaimer, right? I am not a financial advisor. Anything we cover today is not financial advice. We are only discussing the tools that I personally use that influence my decisions, right? You are highly encouraged to do your own research before making any financial decisions. Also, when I say I'm also referring to King and Mark, right? So we appreciate you giving us the opportunity to add value to help you accelerate your trading experience, okay? So when it comes to the candles, first we're going to talk about the origins of the candlesticks. So the origins of the candlestick charting date back to the 18th century Japan, where they first developed the Munehisa Homa, who was a successful rice trader, right? He was a rice merchant from Sakata, Japan. He was known for his ability to analyze and predict price movements in the rice markets. He was also considered one of the earliest market analysts. So a few of his key contributions were he's documented his trading techniques in writings like the Sakata rules, which form the foundation of what we now know as the modern candlestick charting. He also introduced the idea that market prices are influenced by psychology of buyers and sellers, right? So what are the candlesticks, right? Each candlestick is represented by a single, well, in the 18th century, each candlestick represented a single trading session for rice, right? So you had your open price, which was the start of the session, and then you had your close price, which was the end of the session. And then you have your high price, which is the highest price reached during that session, and then your low price, which was the lowest price reached during that session. So why are candlesticks effective? They provide a clear visual summary of price action, right? They also help predict future price movements based on reoccurring market behavior or patterns. So candlesticks were largely a Japanese technique until the 1980s, until a gentleman by the name of Steve Nissan, who was a Western technical analyst, introduced candlesticks charting to the global financial world. So he also authored a book called The Japanese Candlestick Charting Techniques, all right? His work demonstrated how candlesticks could be applied not only to commodities like rice, but also to stocks, forex, cryptocurrencies, and other assets. So why candlesticks become popular? The visual appeal. Candlesticks provide a clear, instant information about market dynamics. whether it's bullish or bearish sentiment. Flexibility, they can be used in any time frame. So for example, the daily, the hour, the minute, and even seconds, right? Also, pattern recognition. Traders can easily identify patterns like double top or double bottom, head and shoulders, or rising wedges, okay? So now we're going to get into the candlestick, the candle description. So what we have here, looking at a candle, we have this area here, which is called the shadow, which is also known as the wick. And then this area here is called the real body, all right? So when we're looking at a bullish candle, the wick or the shadow is going to be on the top with the real body rising from the bottom, heading towards the wick, all right? And the bearish candle, hold on, let me minimize this because I can't see the whole presentation. So in the bearish candle, it is the complete opposite. So the wick or the shadow is going to be on the bottom with the real body starting at the top being pulled to the bottom, okay? Going further into the candlestick description, we're going to talk about different types of candles. So this candle specifically here is the Marubozu candle. So it is simply a block that shows the price just moved in one direction. So for example, in this picture, we have a bullish Marubozu. And what that simply means is that it moved in a bearish direction without any interference from the bears. So it was just simply a buyer's candle with no interference from any sellers, okay? So then we have the doji candle. And what this candle simply represents is that the buyers and the sellers are fighting, but no one is winning. Prices went up and down, but they ended up exactly where they started, or approximately where they started. Now, what we see a lot when we're looking at the charts, we see the spinning top. Now, this indicates indecision in the market, right? So neither the buyers nor the sellers were strong enough to take control. So when we're looking at a spinning top, we commonly see this when prices are starting to consolidate. And that simply means that they're bouncing from one point to the next, bouncing between two price points. So we're going to do a candlestick breakdown. So the wick or shadow of a candlestick represents the price movement outside of the open and close during the specific time period of the candle. So as I mentioned earlier, with this bullish candle, how the real body is being pulled upward towards the wick, right? So here we have the open at the bottom of the real body, and then we have the close. And this is at this point is then where it transitions to a new candle, depending on whatever time frame you're looking at. So for the the bearish candle, it opens at the top and then it closes towards the bottom, okay? So when we're looking at a candle as a whole, when we see double wicks, right? So for this example, this is going to be considered a $25 candle, right? So it opened here for as a bullish candle and it closed here, but in regards to the wick, right? So it opened at $100, it closed at 110, but the wick actually took it to 120. So this in hindsight is really a $10 wick or shadow, right? And then so that was the peak of this specific candle. So it reached a height of 120 and a low of 95, okay? So it's just the opposite when it comes to a bearish candle. We have it open at 110, we had it close at 100, but it reached a low of 90 and a high of 115. So when we're looking at or we're setting our alerts on TradingView, what we see a lot of times, it's the wick that normally sets up the alert versus the real body, okay? Next, I want to talk about this photo here. Now, everybody looking at this photo should be familiar with this photo. Why? Because this is in the everything bundle. Also, the blue, Jesus Christ, the elite. Why can't everybody knows what I'm talking about. My apologies for that, Mark. The Elite Traders Blueprint. Yes, I believe that's what it's called. This here, and thanks to you, Mark, because this is really what started my love of the candles, right? Looking at these patterns, it really made me start to really pay attention to what is actually happening when I'm looking at the charts, all right? So now let's break this down. So the Strat core concept numbering system. So the 1, which is the inside bar. So that means the high and low are within the previous bar's range. So it also indicates market consolidation or indecision. The 2, which is a directional bar, it's a bar that breaks either the high, so either you're going to see a 2 up, or you're going to see you're going to see a low, which represents a 2 down. So this signifies a potential continuation or a reversal. The 3, which is the outside bar, it's a bar that breaks both the high and the low of the previous bar. And what it does is show strong volatility and momentum. So when looking at the 1, the 2, and the 3 in combination, it creates a pattern, right? So patterns are formed by sequences. So for example, if you see a 2-1-2 pattern, that simply starts with a directional move, followed by consolidation, and ends with another directional breakout. Now let's break this down even more. So the inside bar, which is the 1 bar or the 1 candle, it also represents market equilibrium. So no one's in control. So it's important for identifying areas of potential breakout, whether it's up or down, and it often precedes explosive moves. Now, when it comes to the 1 bar, there is a rule of thumb that when you're looking to get into a play, you do not trade on the 1. And to my understanding, the reason for this is because you never know what that second bar, what the bar that's going to follow is going to be. Now, when it comes to bar number 2, which is the directional bar, that's really more of the area you want to get in when it comes to your trades. All right. So a 2 up suggests that buyers are in control, and a 2 down suggests that sellers are dominating. So directional bars often confirm trend continuations or reversals when combined with other patterns. Now, the outside bar, which is the number 3 bar, it shows increased volatility. So it indicates a fight between the bulls and the bears where one side ultimately dominates. And it also can act as pivotal movements for future moves. Now, when it comes to the 3 bar, that can also indicate that the trend is changing. So sometimes what we want to do is we can either wait for it or we can take gains at that point. All right. So now we have 2 indicators that I want you guys to look at, right? So if you're using TradingView, this is what it is. So it's the strat numbers and combos, right? As you can see on the chart, as you can see on the, kiddo, hold on a second. Give me a second, kiddo. Sorry, guys. That's my 5-year-old. As you can see on the chart, we have the 2s, the 1s, and the 3s, okay? And then you have another indicator, which is the strat assisted, okay? Definitely highly recommend you guys look at these indicators because you will now be able to see exactly and understand exactly what's happening with the chart at all times, okay? So in conclusion, understanding the basics of how candlesticks move in the market is crucial because it provides a visual and intuitive way to interpret price action and market sentiment. Candlesticks are like the language of the market, revealing the ongoing battle between buyers and sellers. By mastering their movements, you gain key insights into market psychology, price trends, reversals, timing entries and exits, and adaptability across markets. By grasping how candlesticks move, you're not just looking at charts, you're learning how to read the story they tell. This foundational skill empowers you to make informed trading decisions and builds the confidence needed to navigate the complexities of the market successfully. Candlesticks are the building blocks of technical analysis, and understanding them is the first step to becoming a proficient trader. Thank you. What questions do you have for me? So you guys can begin to unmute yourself.
Hey Neil, it's Vic. Thanks for the presentation. It's pretty good. I was just wondering, I went to the last indicators, which was the strat system and the strat combos. I'm just trying to figure out what's the difference between the two, if you don't mind clarifying, or I can figure it out.
All right, so with the strat, actually let me pull it up. Because I want to make sure I'm looking at them both. There we go. Oh, that's what happened. Sorry, give me a moment.
Sure, no worries.
All right, so with the strat numbers and combos, it's telling you exactly what's going on with the candles, right? So whether it's a 2, whether it's a 1, whether it's a 3. So when you're looking at those specific numbers, now you already have an idea what's going on with the candles, right? So with the strat assistant, now is giving you more of a perspective from different time frames. So instead of you toggling between, let's say, the 1 minute, the 5 minute, the 10, the 20, whatever time frames you like to look at, the strat assistant is already giving you the sentiment, or whether it's a bullish or bearish direction, or what's happening with that specific time frame. All right, so that would be the difference between the two. Sorry, let me cut this off. Does that answer your question?
Thanks. Yeah, I just need to go through it more. I think more in detail to figure out how I differentiate the board. But thanks for the feedback. I'm going to go through it, and I'll ask you if I have any more questions, I guess.
All right, cool. If need
Thank
be,
you.
after, because I do have another presentation in regards to EMAs and SMAs. If you need me to go
Perfect.
and show you guys on the chart, then I can show you guys.
I'd appreciate that. Thanks, Neil.
Not a problem.
Hey,
Anyone else?
Neil. Yeah. Hey, this is Archie. I have a quick question on the candles.
Yes.
So when I'm looking at a candle, say if I don't have like the strat assistant or the strat number combos added on to my indicators, how do I tell if a candle is a 1 or 2 or a 3? Because if I'm on any time frame, it just has the candles and I can see the wicks on them, but doesn't necessarily tell me if it's a 1 or a 2 or a 3.
Well, I would recommend learning that first, just so you can understand how the 1 moves, how the 2 moves, and how the 3 moves, right? Or what you can do, there is also an indicator called stochastic candles, right?
Mhm.
You change the color of the candles to represent those specific numbers. So you can change your yellow to a 1, and your 2 to a purple, and your 3 to a green, right? So it's really up to
Okay.
you how
Yep.
you set up your charts. But
Appreciate it. Thank you. Yep. I see it.
I would highly recommend just looking at the strat numbers and combos in general, so you can really start to familiarize yourself with what's happening with those number specific candles. Because I'm telling you, once you really understand what's happening with the candles, it's a game changer. Because I literally can look at my chart right now without looking at any indicators and understand who's in control.
Okay.
That's the
Thank
level you want to be at some point, right? Because if you're like me and you spend all day looking at different indicators, you want to make sure that however the candlestick is moving, is also moving in the same direction of the indicator. So like, say for example, there is an indicator, and I'll touch on this indicator later on. It is called the machine learning GPR, right? In my to me, it has it's a trend line, and what it does, it predicts the future movement of the candles, right? But it's not 100% accurate. I would probably say it's more like 80, 85% accurate, right? So you can see that that trend line is moving in one direction, but based on how the candles and the price points and who's in control at that moment during that time frame, it's going to show something completely different, right? So because I understand what's happening with the candles, and when the indicator's not telling me the same story, I'm 100% okay, because like I said, I understand what's happening with the candles. Any other questions?
Yeah, Neil,
Neil.
I have a
Oh, go ahead.
yeah, okay. I was glad that you brought up the stochastic candles indicator because I also use that sometimes on my charts. So I'm assuming that you can't combine the strats, numbers, and combos with stochastic candles, so whereas you can get the numbers on top of the stochastic candles.
You can. Yeah, you can. You
Okay.
just have to play with it. So what you have to do is once you so you just I mean yeah, because they actually do they're actually on the chart at the same time. So once you pull up the strat, it immediately goes straight to the chart, and then once you add the stochastic candles, it automatically goes straight to the candles. So it's just really a matter of adjusting, right? Because I don't know if you guys ever, well, since you're using it as an example, when you look at the settings, whether it's theme 1, theme 2, or theme 3, you can see all types of colors. Like when I tell you the colors are insane. So now it's just a matter of making the color to fit whatever you want it to be, and then just turning off all of the other colors that you just don't want to see.
Okay,
And the reason why I don't want to pull this information up because I don't want to start confusing people. So that's why I'm really and everything in me wants to pull it up and show you guys, but this is only week 1, and I don't want to put too much information on you guys, and then now you guys are starting to look over here and over here versus actually what's happening in front of you.
yeah, I pretty much set it up to mark specifications with the video that he had on theme 2. So like what is the purple candle? And then what is the blue candle?
All right, so for me, and I believe my setting is very similar to Mark's, I really only pay attention to, so first you have to understand what the colors mean. So each color represents a different level of aggression based on who's in control, whether it's a bull or a bear. So for me, when I'm looking at when my candles are yellow, that is a aggressive uptrend. And then when I see that sky blue candle, that means that the trend is going to change. And then when I see the purple, that is a confirmation that is now going to be a downward trend. So those are the only 3 colors that I'm looking at. Because I want to see if the bears are in control, I want to see when the trend is changing, and I want to see when the bulls are in control. That's all I want to see. One thing you're going to learn about me, I am a very simple individual, and I like my charts to be very simple. I want to look at it. Okay, this is what's happening. I want to get into a play. I want to look at it again. All right, that's what's happening. I want to either make the decision to stay in or get out. That's it. I'm not looking for anything else.
Yeah, my candle color are the same. So I really appreciate that breakdown. Thank you.
Yeah, for sure. Someone else had a question. Who's next?
I was gonna ask you to pull it up on the chart, but you just mentioned that you're gonna hold off, so I appreciate that.
Yeah, because I really don't want to confuse individuals. But next week, I will go back and I'll pull up the strat. I'll pull up the strat assistant, and then I'll also talk about the stochastic candles.
Looking forward to it.
Anyone else have a question?
I got a question.
Yeah.
Could you, I saw you had the same chart that Mark has where it shows everything. Could you maybe show what a 2 up versus a 2 down looks like?
On the chart?
Yeah, on the picture chart. That way you don't go into the actual market.
Well, you can see that right here. Let me pull it back up. So I'm gonna pull up the actual strat, the photo of the strat dictionary. So this way you can see what a 2 up and a 2 down is. Because again, I don't want to put this on the chart, and now everybody's going to start playing with the strat on the chart based off of what we talked about. Again, we're still fresh, so I want to make sure you guys get warmed up before I start hitting you with the real game.
Pause.
Right? Somebody say pause.
Pause.
Extremely slow. All right, so here we go. So so we have a 2 up and a 2 down. So now understand, when it comes to a 2 up and a 2 down, it just simply means that the 2 candle is either as far as 2 up, it just simply means that the 2 candle is a bearish candle. I'm sorry, a bullish candle. And when it's 2 down, it just simply indicates that that 2 candle is now bearish, right? So they just use 2 up or 2 down just for reference, right? All right, so we have a 2-1-2, which is a bullish reversal, right? So we have a downward flow, and then we have the consolidation, which is followed by an upward trend. And here we have a 3-2-2, right? It's spinning, right? And then we had a bearish candle followed by a bullish candle. So always remember that one candle is just indicating that it's consolidating or there's indecision or the bears and the bulls are fighting, right? But please familiarize yourself with this, because I really want you guys to understand that this is a game changer once you really understand what's physically happening through your candles. And just take the time one day, maybe even towards the end of the day, when you're out of all of your plays, just turn off all the lights, not the physical lights. I'm talking about turning off all your indicators, and just watch the candles, right? Watch the candles, look at the price movement, and just make a quick comparison. Especially do this on whatever ticker that you're constantly trading, because now that is going to create such a beautiful picture for you.
So
Neil,
quick question.
Yes, sir.
So I see like it's like the patterns are all like sets of 3s and 4s. Is there like a rule of thumb to like how many candles you should be looking back at to kind of look for what's going on in the chart, or a certain amount of candles that need to be completed before you actually can identify what's going on?
Well, so the candle and for this example, right, you see 4 candles.
Mm-hmm.
So this specific candle, this specific candle is based on the movement of this candle, right? Because at the end of the day, it all depends on who's in control during that specific time frame. So let's say, for example, this is a 15-second time frame. So what we had here, we had the buyers and the sellers fighting, right?
Mm-hmm.
When it came to this candle, it simply means that during that 15-second transition, the buyers were in control. So it started to move upwards. But then what we still see here, it just consolidated. So it just bounced between whatever the price points are at this specific time, right? And then now when we got into the 2, which is the official directional candle, now it continued that upward trend, right? But now we understand, because this is a 1, 2, 2, now it's going to reverse, which is going to create an official pattern, right? Which is why it's overall considered a bearish reversal.
All right.
Hey, Neil, just a quick question. So, because I never really noticed that. You said the purple signifies a strong downtrend, and then the light blue was, what was the light blue and yellow one again?
The light blue represents that a possible trend change, that the trend is going to change. So what I normally see, I normally only see that sky blue candle when it's getting ready to reverse to the downside.
Yeah.
Now you're also going to see other blue candles, but when you really are looking at those candles, you really start to see a little bit more of consolidation than anything. Now, sometimes you're going to see upward momentum with those darker blue candles, and you're also going to see sometimes downward momentum with those darker blue candles. But again, me personally, what confirms the trend for me is that yellow or the purple. Because again, each color simply represents a level of aggression. That's all.
Thank you.
No problem. Any other questions? So if we don't have any more questions in regards to the candles, then I'm going to talk to you guys about what Weel showed us yesterday, right? Because I really want folks to understand, if you start digging into using the EMAs, I want you to understand exactly what you're looking at, okay? All right, so another presentation. And also, so before we get into this presentation, I really want everybody to understand one thing about me. I am a huge believer in the KISS method. And for those of you that are not familiar with the KISS method, it stands for Keep It Simple, Stupid. Now, of course, that is not to insult anyone's intellectual abilities on the live. I just want you to understand why I use it, because I like things to be as simple as possible, right? So when I show you something, I'm going to show you the technical aspect of it, and then I'm going to break it down so it's that much more digestible. And believe it or not, because we have so many different learning styles on the live, I want to make sure that you can understand it from a technical aspect, and you can also understand it from a non-technical aspect. Because believe it or not, personally, me, when it comes to me learning things, in order for me to retain it, I have to touch it, or it has to be broken down to its lowest common denominator, right? So that's how I learn to show other people the information, okay? My apologies, guys, if you hear my voice in the background. I know everybody's out of school this week, so.
You're a parent, Neil. You don't need to apologize. I know how it is, brother.
Nah, I don't want to hear it.
Listen, King, not all of us get to live the exciting lifestyle like you, brother, right?
Nah, I definitely get it. During the summer, I got 6 here at one time. So yeah, I get it.
Good.
Six.
There are 5
Yeah.
and 7, so they're at that age when they just want to be entertained. So,
Yes. Oh.
and let me find this presentation.
No disclaimer, guys. I love kids. I love Neil's kids also, guys.
I'm gonna drop my kids off to you one day.
Hey,
That was a nice save right there.
I didn't say that. I love kids that go home to their parents.
Mark know how we feel. Mark got teenagers. He got grown kids.
We're gonna drop him off to Uncle King for a day.
Bruh, I'm gonna tell you, I wish I could say it gets easier, but it doesn't. These kids built different.
Listen, my daughter is about to be 13 and she has a 19-year-old attitude, and it drives me insane.
Nice.
I'll be like, King, why you got them all standing in the corner holding books?
Okay, if my daughter was over there, she'll be the one telling them to hold a book. She's 8 and she act like she 81.
Oh,
Well,
Lord.
that's because you're
I
around
call
big
her-
boys. You guys
I
We-
call her grandma. She don't
We
play.
do wall sits around here.
Yes,
You got to
sir.
sit on the wall when you get in trouble. I ain't got to whoop you.
Yes, sir.
Nah. About 10 minutes in, when you do that, that's how I know I got you.
The air gasping.
Hey, Neil, that was a great presentation on the camera. I mean, on the candles too. By the way, I just want to tell you thank you for that. I even learned something too about the Marabuzo.
Yeah,
Candle.
the Uzo candle.
Yeah, that's
Thank
cool.
you.
Thank you.
All right, so now let's talk about the SMA versus the EMA. I apologize. I don't know why my everything is moving so slow when it comes to the presentation.
Don't comment, Neil. No comment.
Wait, you think it's the kids? Huh? Is that what you're telling me?
No. It's not the kids this time.
King gonna tell you you need to buy a new computer.
That's
Yeah,
what I was gonna
same thing
say.
he told me.
No, listen, and we
Same
we
thing
have
he
had
told
that
me.
conversation, and he is 100% right. I'm not even gonna get into the issues I've had with this computer, but we're gonna leave it right there because I do plan on getting a new one. That is a fact. So all right, guys. So the SMA versus the EMA and what you need to know. Okay. So first off, let's talk about moving averages, right? So what is a moving average? It is a way of smoothing out fluctuating data over time to help identify trends. So as I said, I'm going to give you the technical and then I'm going to break it down. So imagine you are counting the number of cookies you eat every day. And I know some of these examples may sound silly, but walk with me because I'm telling you, it will stick with you, believe it or not. So imagine you are counting the number of cookies you eat every day. If you want to know the average number of cookies you eat over the past 5 days, you simply add up how many cookies you ate each day and then divide it by 5. Okay? So both the SMA and EMA are types of moving averages used to smooth out price data over a specified period. They help traders spot trends in the market, but they work slightly different. All right, so what is the SMA? So a simple moving average is a way to find the average of a set of data over a specific period. Now, what is the EMA? An exponential moving average is a type of moving average that gives you more weight or importance to the recent price data than the older price data. Okay? Now let's break down the SMA. So again, the SMA is a way to find the average of a set of data over a specific period. So for example, if you are looking at the 5-day SMA, you would add up the closing prices of a stock for the last 5 days and then divide that number by 5. So I was calculated. So day 1, $10, day 2, $12, day 4, $14, $13, $15. So you add them all up and you get 64, and then you divide that by 5. So what is that? It's $12.80. So the 5-day SMA for that specific stock would be $12.80. So why is this useful? The SMA helps smooth out short-term fluctuations and makes it easier to spot trends in stock price over time. It gives a clearer picture of how the stock is performing on average over a time period you're looking at. Okay? Now let's break down the EMA. So the EMA, as I mentioned earlier, is an exponential moving average, which is a type of moving average that gives more weight or importance to recent price data than older price data. This makes the EMA more sensitive to recent price changes compared to the SMA, which treats all price data equally. So how is the EMA calculated? It starts like a simple moving average, but it puts more emphasis on the most recent prices. So the more recent the data, the more effective the average. So when you're looking at the formula, it involves a factor that determines how much weight to apply to the most recent prices and the value and the current price. So now imagine you have a bowl of fruit and every day you add a new piece of fruit, which is the latest price, and the bowl represents the average of all the fruit you've added so far. Okay? So, but the EMA is like giving more importance to the fruit you just added today than the fruit that has been in the bowl for a while. So even though the fruit that's been there for a while is still a part of the bowl, the newest fruit you added has a bigger influence on how the bowl looks today. So for example, if you're looking at a 12 EMA, you're using the last 12 days of data to calculate the average, but the most recent day will count more than the previous ones. All right. So if you're looking at the 50-day EMA, the calculation will be based on the last 50 days with more weight on the most recent days. Okay. Now, let's look at some key differences between the EMA and the SMA. So when it comes to sensitivity to recent data, the EMA gives more weight to the recent prices, so it reacts faster to the changes in price. The SMA treats all data points the same, so it reacts slower to price changes. Now, when it comes to speed, EMA is faster to react to price changes, making it more responsive. When it comes to the SMA, it's slower because it treats older data the same as newer data. Okay? Now, when it comes to trends, the EMA is better for short-term trend following since it reacts quicker. The SMA is better for longer-term trends as it smooths out the data more evenly. So, which one do you use? Now, the EMA is generally used when you want to see more immediate trends and are looking for signals that respond quickly to price changes. So the SMA is often used to see longer-term trends and can help filter out short-term fluctuations. So in simple terms, the SMA is like looking at the average of all the prices over the period and treating each price the same. The EMA is like looking at the average, but giving more importance to the most recent price to help you react faster. So in layman's terms, so if you're driving in a car, which is the stock price, the SMA is like checking the road every few miles to see how smooth the ride is, while the EMA is like focusing on the immediate road in front of you, which is going to react quicker to the bumps or the turns. Okay? In conclusion, if you are looking for a long-term trend and prefer a smoother or less volatile line, the SMA might be the better option. Now, if you want to be more responsive to recent market changes and focus on short-term trends, the EMA could provide more timely signals. In both cases, these moving averages are invaluable tools for helping traders and investors identify trends, confirm signals, and filter out the noise in the market. The choice between the EMA and SMA depends, of course, on your time frame, trading style, and how much sensitivity you want to market changes. Wait, like that just made no sense. How much sensitivity you want to market changes. I think I left out some words. So both the EMA and the SMA are important tools to use in technical analysis to identify trends in the market, smooth out price data, and help traders make more informed decisions. However, each has its own strengths and is suited for different purposes depending on the strategy, the trading strategy, and time frame. Okay. So that is the end of that presentation. All right. So now what I want to show you guys is how I set my chart up based on looking at that specific video that Will showed us the other day, or yet showed us yesterday. Okay. Okay. So now, based on the information in the video and also what Will was explaining to us, right, we talked about 5 different EMAs, right? So in this case, how I have them color coded, so the 52 EMA is the green, which is this one here. The 63 EMA is the yellow. The 78 EMA is the orange. The 126 EMA is the red. And the last one, which is the 130-day EMA, is the purple. Now, based on the information on what the video was showing and also what Will was explaining, when you're looking at the 52 EMA, you should be looking at the weekly. Okay? Now, if for long-term purposes, if the price action is taking place above the 52 EMA, then you want to be in calls, all right? Then I want to be in calls. And again, this is not financial advice. Then I would want to be in calls, right? If I'm looking at anything from a weekly perspective. And I know I can't remember who asked this question specifically, but as you can see, I have all of the EMAs on the chart. I know Will had it set up on different charts for those specific timeframes, but you do have the opportunity to just simply put it all on one chart and then just simply toggle between the timeframes, right? If that's easier for you, all right? I know it's easier for me, okay? So when I'm looking at the 63 EMA, which is the yellow, now I want to be on the daily. So let's look at what's happening with coin on the daily. All right, so it's right there at the 63 EMA, right? And as you can see, I should be in puts, of course, because look at what's happening with the price action, okay? Now, when you're looking at the 78 EMA, which is the orange, I want to look at the 5-minute time frame. Okay. Now the 78 EMA is the orange, right? So when it's below that 78 EMA, where do I want to be? I want to be in puts, okay? And as you can see, that would have been the right decision for me, all right? Now we're looking at the 126 EMA, we're looking at the 65-minute time frame, which is going to be the red one. And it's a little hard to see because it looks like it's lining up with the 130-day EMA, but it's right there. Now, the dope part about looking at this on a 65-minute time frame, it's clear that I want to be in puts because overall, the price action is below all of the EMAs, right? That's the dope part about when you're looking at EMAs. It paints the picture for me that if it's above a specific EMA, I want to be in this type of play. Or if it's below a specific EMA, I want to be in this type of play, okay? So now looking at the 130 EMA, which is the purple, I want to be on the 15-minute time frame. And as you can see, price action is taking place below the 130-day EMA, okay? Now, since I do have the chart up, again, let me explain to you the whole situation with the stochastic. So this is what I was referring to with the purple, all right? So you can see how it did indeed trend downward when it came to the purple and how it trended upward with the yellow. And when the trend changed, I saw this light blue candle or teal, or I don't know what color exactly this is. But so this is what I was referring to when it came to the stochastic candles and what I'm looking at and on my charts, okay? So any questions in regards to the EMAs? And well, since of course we just mentioned the stochastic candles, any questions on the stochastic candles?
I have a question on the EMAs.
Okay.
So when you are looking at the EMA, how much weight are you putting on it compared to the other indicators? And how many of your timeframes are you looking for to be in confluence to make a decision based off of the EMAs?
Okay, so for me, when it comes to the EMAs, I use it for two reasons, for two things. I use it for price points and exactly where the price action is taking place. So when it comes to price points, right? So let's say, for example, we're looking at the 130-day EMA, which is the purple, right? Right here, it's at 279, right? So let's set an alert there. If, for whatever reason, at some point today, coin goes above 279, then I want to get into a call. Because looking at the 15-minute time frame, it has gone above that specific EMA, okay? Now, of course, because it's below that specific EMA, now I want to be in push, which is what I actually am already in. Okay. What was the second part of your question?
How many of the time frames are you looking to basically be in confluence to take a decision? Like if it's on the 15-minute and it's saying a call, and then maybe you're looking at the 1 day it's saying a call or a put, like how many of them are you looking to say the same thing before you take a position?
Okay. So me, I live on the 15-second because I do a lot of day trading, right? If you are not ready for this, stay away from it because it moves extremely fast, right? When it comes to any specific time frame, please understand that all that represents is how quickly that candle's price action is moving, as well as, well, not necessarily moving, but how quickly the candle is going to change from one candle to the next, right? So, for example, here, based on what's happening with this candle, the real body is being pulled downwards. If it continues by the closer it gets to that 15-second mark, it's almost guaranteed that that following candle is going to be a seller's candle, right? So let's watch this for a second. Right? So now I'm going to predict what that next candle is going to be. That next candle should be a purple candle. Wow, that's like magic. And why? Because I understand that because that real body is being pulled down closer to, and then you can always look at your time frame down here. And also, this is what Mark was referring to when you have your extended, is it the? Well, I'll get back to that later.
In the trading hours.
Right, I know what it stands for, but when he was talking about the real-time data, is this what he was referring to? Is that what you're supposed to see when the real-time data is active?
No, I don't know. You have to let him answer
Yeah,
that.
I was throwing thumbs up, but yes.
Oh, okay. All right, cool.
Yeah.
All right, so I lost my train of thought. But yeah, so when you're looking at the real body, if it's being pulled down based on that specific time frame, so for example, we're on the 15-second, right? So I based my understanding and my decision, the closer it gets to that 15-second mark, if it's being pulled upward or if it's being pulled down. That's it. Nothing more, nothing less.
Well, let me chime in on that.
Okay.
So with the time frames, I notice I see that's causing a tad bit of confusion, and it's understandable. With the time frames, you have to remember whatever time frame you're in, that is if you're going to use that time frame to make a decision, it's only that amount of time, right?
Right.
You see something, if you see a buy signal, let's say, I think she said on the 15-minute, and then you go out to the day, then from the 15-minute, I would check maybe the 1 hour or the 65 to see if I get confluence. Now, if I got multiple time frames telling me the same thing, then that's confluence. So I would be more inclined to go in that direction. But
Right.
sometimes you see time frames that are conflicting. Remember, if you're on the 15-minute, those are 15-minute candles, right? One of those candles is 15 minutes, two of those candles is 30 minutes, and so on and so forth. So that is the picture that you're looking at. If you're using the 15-minute, remember that it's a matter of 15 minutes to however many candles. You don't want to use data from the 15 minutes solely to make a decision on a day trade, right? You don't want to use that data on the lower time frame to make a decision on a further out play, if that makes sense, or like a swing trade. And then the EMAs, I use those a lot. I use them mostly on the higher time frames because on the lower time frames, they're going to change faster because price is changing faster. So you can use them like if you on the 1 minute or the 3 minute. I particularly particularly use them, as Neil said, as price points. When I see the 10 EMA at a certain point or the 20 EMA at a certain point, I already understand what happens when those EMAs are broken, right? They're the averages. So we see like the 200, like right now I'm looking at SPY on the 10-minute, and it's bouncing off the 200-day EMA. Now, we all know the 200-day EMA, well, we may not all know that, but the 200-day EMA is the floor. So if we break through the 200-day EMA, I'm more inclined to believe that on the 10-minute time frame, SPY is going to be bearish for a while, if that makes sense. So I'll give you an example. When you're looking at the EMAs from top down, let's picture the EMAs as like a rooftop or a building, right? Let's say we all gonna meet up on the rooftop of whatever building it is. We're gonna have a meetup, and it's a rooftop party, right? So the rooftop is going to be where we're standing at, right? In this case, we're Price. All of us is Price, and we're at the top of the rooftop, right? That's gonna probably be a 7 or 10-day EMA. Below that, you're going to have another level down, which is your 20 usually. So in the case of how we look at it, it's 10, 20, 50, or 72, and then the 200, right? So we're all out partying and we're in the rooftop. As long as we're up on the rooftop, we're having a good time. We're excited, things are going well, so we're bullish, but we're having a good time. Let's say while we're partying, we notice that Sam has decided somehow Sam has ended up 2 floors below us. And we'll say that's the 20-day EMA, right? So, okay, we figure out what's going on with Sam. We try to get him back up to the party. Price is the same way. It can break that top level and come down to the 20 and bounce back up. It's not that terrible, right? When we see price break the 10, go to the 20, sometimes it'll bounce back up. Same thing with Sam. If we're partying, maybe partying a little too hard, somehow he stumbled down to the second floor. We go get him. He said, I'm okay, I'm fine. We go back up to the party continues. But let's look at it like this. The 50-day EMA is halfway through the building. Let's say the building is 100 floors. The 50-day is the middle of the building, right? If we're partying and we notice that Price, or Sam in this case, ends up halfway through the building. Let's say he falls halfway through the building. Sam, or Price in this case, isn't doing so well, right? Once we see Price go all the way down to the 50-day EMA, now we have some decisions to make. So now we have to figure out, are we taking Sam home? Are we putting him in an Uber? Is he going to the hospital? Is he okay? What are we doing with Sam, right? And that's Price in this case. Once you see Price hit that 50-day EMA, you want to be aware that something is happening. And you have to make a decision. If you're in calls, you need to make a decision. Maybe it's time to practice risk management and take Sam home or get out of the calls. If not, if we do break the 50 and we decide, well, this is going all bad, so we're going to take Sam home and everybody else needs to go home. All of Price is broken to 50, and now we're in a bearish trend, right? So let's go a little bit further. Under the 50 or the 72 is what? The 200. I want you all to always remember that the 200 on any time frame is the dividing line. That is the ground, okay? And under the ground is what, guys? I don't know, but I don't want to find out. Well, I was told something when I was a kid, and I believe it's still there, okay? Under the ground is not a good place to be. If we're all supposed to be partying on the rooftop, and Sam ends up at the 200-day EMA, which is the ground, party's over. Price is no longer bullish. Nobody's happy. Party is over. And we're probably going to experience some turbulence behind that, okay? When you see prices hit the 200-day EMA on any time frame, but especially the daily time frame, it is over. That is the ground. Anything under that is terrible. So, and I hate to say this, so I won't use Sam, let's use an imaginary person. But if this imaginary person happens to fall all the way from the top and breaks through the ground, no good. When you see companies or when you see price break the 200-day EMA, just remember that is the ground. And remember the picture, right? We want price if we're bullish, and you know, sometimes I want price the other way around. Y'all know that. But if we want price to stay bullish or positive or up or happy, whatever you relate to bullish, right? We're having a good time. We all must stay, and price in this case, above the 10 EMA, right? We must stay at the rooftop. Once price starts to do anything but party on the rooftop, we need to pay attention to what price is doing, because it could damage itself. It could damage the group. Party will be over, right? We can get into a downtrend that we couldn't get out of, like my girl AMD did. She's trying to shake back, but it's been a while, right? So I just wanted to give you guys that simple analogy. When you're looking at the EMAs on the chart, just imagine them as stairs to a building. That top EMA being the penthouse rooftop. And I know some of us have been to rooftop parties, and they're delightful, right? It's a good time. So I want you guys to kind of picture that in your head when you're looking at the EMAs. Now, if the EMAs are doing anything but stacked on top of each other, headed up, we're in trouble. So let's think about it like this. So we talked about what happens when price falls, right? What happens when the EMAs start to fall? Remember, these are our floors. You know what? Let me share my screen so I can show you all a tad bit better. Okay.
Can you share?
You got to give me permission, Neil.
Okay.
Hey, real quick, King, that analogy was spot on. I got it perfectly how you explained it.
Okay, so stop talking. No, it's fine.
Yeah, that was dope.
Okay, cool.
Good
I just
job,
felt
man.
the need, since we saw some confusion and it's happening multiple times, I just felt the need to try to explain this.
Appreciate that.
Sorry for interrupting, Neil. Let's see if I can get not that screen. Oh, too many screens. Let's try this one. Are you guys able to see this screen?
Yeah, you're good to go.
Okay, and this is the old flawless setup, so it should be pretty simple for you all, right? So let's look at this particular, this is Oracle. And we can see, let's go to the day time frame. It may be easier. Let me turn off all of my markings. Maybe not Oracle. Let's try something else. I want to get a good picture of something. It's pretty bullish. Oh, we can use Oracle. But I've got it marked all up. Someone give me a ticker that they like, anything.
How about
Tesla.
Meta? Meta's been bullish for a while.
UPS.
Meta, perfect. Thank you for that. Okay, so look at Meta. We got the EMAs, right? This is the slingshot. I'll turn that off so it doesn't confuse you guys. Okay. So if we look at Meta right now from that analogy, we're looking at Meta. This is us, right? We're price, right? If we're looking at Meta, Meta is what? Bullish. Meta is pretty bullish. Would you all agree? Just shake your heads if you say yes. Cool. This is the first floor. 10 EMA. This is the top of the building. We are partying on top of that, right? This will be the next level down. Price comes to here. It could come. It can bounce back up. Sam falls a little bit. Sam, okay. Let's get back. Let's get back to partying. Here's a lot further down, right? 72, no good. The 200, no good. So you see, if you look at Meta, right? Most of the time, these stocks will come down and test these other levels and push back up. Right? Makes sense? Have you guys noticed that? Okay, if not, from this chart, you can see it'll come down, but never did it come down to the ground, right? Meta has ultimately been in the uptrend. Like you said, it's been pretty bullish. So what I want you all to also pay attention to is the EMAs themselves, okay?
Quick, sorry to interrupt. Can you just double click on the chart to make it bigger?
Double click.
Yeah, there we go, like that.
That's better for you all? Yes.
Yes.
Okay, cool.
Yeah.
Y'all can talk. You can turn your mics on and talk to me. Okay, cool. So I want you to pay attention to What you say, bro? Okay. I want you all to pay attention to the EMAs and their positioning, right? So if this is the top floor, this is, let's say, the 20th floor, this is the 50th floor, this is the ground, right? Or maybe that would be in reverse, the other way around, but y'all get it. Pay attention to not just the price, but the EMAs, because if we're partying here, right? And somehow this floor ends up under this floor, that's a death cross, right? Is that a good scenario?
No.
That is a negative scenario or a bearish scenario. If we're supposed to be here partying and somehow this floor ends up under this floor, we're in trouble, right? Yes. Same thing if the top floor ends under the middle floor. And I'm telling you, on any time frame, if you ever see the 10 go under the 200, that is just, it's the top floor is under the bottom. That is the worst case scenario as far as EMAs go. Any questions on that?
No.
So now,
No.
what if EMA goes below the 200? Is that still a bad idea?
If the pink goes below the 200, is that what you're asking me?
Correct.
Yes, this is the 50-day EMA. This is the 50. This is halfway through the building. If any of these floors start to go under the floors that they're supposed to be on top of, we're going bearish on that time frame. This is the daily time frame, so it's going to hold a lot more weight. I can't remember the last time Meta went under the 200. Good companies rarely go under the 200 because they know that is a death kiss. Okay. But does everyone understand that analogy?
Yes.
Yeah.
Yes.
Perfect.
What's up, Deb?
Hey.
Everybody good? Thumbs up.
So King, real quick, is it safe to say when you see that on a chart and you see the floor is about to come down, how you explain it, those are good opportunities to get in some puts?
Absolutely. Absolutely. Those death crosses are always going to tell it. And if you're day trading on lower time frames, these things are going to move all day. So that can kind of give you an inkling. A lot of times on the 3-minute time frame, I'll watch the EMAs, right? And when I see, sorry about that. Still getting used to this Mac. So when I see the EMAs cross, what's usually followed by a cross?
Drop.
That's right. So in a 3-minute time frame, is this a little trick I use on the lower time frames, 3-minute, 1 minute, or the 5-minute? When you see that 10 and 20 cross, the yellow and the blue, that's usually letting you know that price is about to go down. So someone asked me yesterday, how do you know when price is going to go down?
Oh,
that was you.
Yeah.
How can you see that? Well, I'm looking at the EMAs a lot. I'm always going to pay attention to where the EMAs are because it may look like it's going up on the 1 minute, but if I see a death cross coming on the 3-minute, or especially the 10-minute is over, okay? But if I see a death cross coming where we're supposed to be going this way, look what happened when that death cross happened, right? 10 went over to 20, the 20 went over to 50, the 50 went over to 72. And Neil asks, what happens when the 50 goes under the 200? Well, we see what happened here, right? Now, again, this is the 3-minute time frame. So the next candles are going to give me 3-minute increments. So this is a play I'm not married to. I don't want to be in this play forever. I don't think Meta's permanently in a downtrend, right? Because look at it here. On the 3-minute, it dropped about $20. How did I miss that?
Yeah, I wanted to chime in since you had this one up, but I didn't want to interrupt you because some of you may or may not know, I have some Meta calls out to April the 4th. And this morning when it did pull back, of course I love pullbacks. I only bought one to average down, and then I bought a put for next Friday at the 720 strike. made profits on the put because also when I'm day trading, King, if you don't mind, go to the 10-minute time frame. I have the same setup. If you want me to share my screen, I could do that. But so I look at this 10-minute time frame to move a little bit slower because is that purple your 200 or is that your what date, what time frame is that? It's your 8. Okay, good. Perfect. So my 800 is like a, a light purple color. And I really like having the 800 EMA in addition to the EMAs that have been discussed today and yesterday afternoon, because for me, this acts as a massive key level of support for day trading. Usually, when I see something hit the bottom and hit that 800, if we hold above that, we usually will bounce off of it. But if I see it fall below that, especially for day trading, then yeah, I'm gonna be a big old Yogi Bear. All right.
Yeah.
But bouncing off that 800 is critical because now I'm looking for that to almost act as the bottom of a Fibonacci without the Fibonacci being there. Okay. And what you'll learn about, we talked about some of this stuff yesterday, and I know some of this may be a little advanced, but I love the analogy that King used because it gives clarity to the most simple yet effective strategy that you can use with the flawless trading system, and that's with the exponential moving averages. And I'm just so glad that he threw that 800 on there because again, we're seeing a clear bounce off of support, and you can see it a lot better on the shorter time frames. So let's just, if you could, King, go back to like the 4 hour. All right. So if I'm looking at the 4 hour at this point, and like I said, I'm in calls out to April the 4th, and y'all excuse my voice. My throat's kind of hurting, but out to April the 4th or what have you. So I got time, and I also see here that with the smart money concepts, it's acting as support. But if King goes all the way down below that 200 EMA on his screen, if you can just drag for me, you see how far away that 800 EMA is? So again, like he stated earlier, it hasn't fallen below that 200 EMA for some time, but in the event that we start seeing the 10 go below the 20, the 20 below the 50, the 50 below the I'm assuming that's 100, and the 100
72.
and all it, 72, 72, and then all of that below the 200, then of course we can definitely be bearish. But again, this is an extra layer of confirmation, but one of the most simple and effective, easy ways to see the chart and be able to see what's happening or what's going to happen before it does.
Absolutely. And so getting back to time frames, I want you all to remember the time frames are going to be that they're going to hold the weight. Let's think about it like that, right? So on a 1 minute time frame, you get a bunch of 1 minute candles. That's a basket of 1 minute candles. It's a basket of $1, right? When you go further up, right? 3 minute, 10 minute, as you get further out, those candles have more data in them, so they hold more weight. Does that make sense?
Yep. Yeah.
So that's why it's imperative to pay attention to the time frame. Because if we look at Meta right here on the day time frame, Meta's in an uptrend out of this world. It's just now coming down to test the 10, and it looked like a catastrophic fall, right? It looked like a huge drop. All it did was come down and test the 10. It hasn't even fallen down to the second level yet. But if we zoom in and we look at like the 4 hour, right? It looks a little bit nastier, right? The 4 hour is going to show that we broke the 10 and the 20 on the 4 hour. So if I'm thinking about plays for the next day or two, then this is going to hold more weight. We're going to pay attention to Meta breaking the 20, right? That happened today. Meta broke the 20 on the 4 hour today. So if I'm looking at a day trade, right now I wouldn't be so fast to get in the puts. Why? Because we came all the way down and we caught support on the 800 EMA. This is a case I would use the 800 on the lower time frame. Make sense? I never see this on the day. If we see something break the 800-day EMA, it's like SMCI. It was terrible. It fell from the sky, right? So, but on the lower time frame, I can see that this is an area of support because price doesn't want to break that. And now we're bouncing on the 10-minute time frame to try to push back up. But this is the 10-minute time frame. My Meta shares and leaps didn't feel this much. Okay? Because further out time frame, and I'm looking at more data. Go to the day, more data. Everybody understand that?
Yep.
Or the 8 of you all that are participating, you all understand that?
Yep.
Yeah.
Copy.
Yes.
Good, good.
I do have a question still with time frames.
Go
So, like say a day trade, if we working from the 10, is there like, should we incrementally work our way down, or can we like jump from like the 10 all the way down to like the 1 minute to find our entry, or should we kind of like work from like the 10 to the 5 to the
So
3?
let me clarify this. We're gonna only talk about day trading here, okay? If you're looking at a day trade, I want you to go from the day down because you're looking at a day trade. You're only concerned about what happens today, right? So as the further you go down is your preference to get the better painted picture, okay? So when we go this way, once we go down, if you land at the 10-minute, right? Let's say you go to the 4-hour, and the 4-hour is bearish, okay? 4 hours pretty bearish. Let's go to the 1 hour. It's also bearish. Well, I pretty much made my decision that over the next 4 hours, 65 minutes, the part of this day is pretty bearish, right? The heavier parts of this day is bearish. So then when I go down to the 10-minute, I want to see confluence. If I see the 10-minute is also bearish, now I have to remember that we're dealing with 10-minute candles, right? So what you're waiting for is for the 10-minute candles to play out in the direction that you see them. But understand they're 10-minute candles and you're only going to get so many of them, okay? So when I'm at the 10-minute and let's say I decided I want to play puts today. I go to the 10-minute probably to look for my entry because it's a quick play. If it's a day trade, I'm only trying to be in it for maybe 10, 20, 30 minutes. So now I'm on the 10-minute because this is all I want to see. What are you about to do in the next 10 to 30 minutes? Right? And we know that's 1 to 3 candles. If I can get 4 or 1, 2, 3, 4, if I could have got 5 candles, my day is done. Right? So we're looking at the 10-minute. This is where we're probably going to enter. And now we're going to monitor the play on the lower time frames. That's why you hear us say, let's zoom in, because once we go on the lower time frames, we can see what price is doing faster.
Okay.
Right? So go ahead.
So we wouldn't buy at those smaller time frames. We would just monitor, like buy like at the 10-minute time frame.
If it's a day trade, I love to enter on the 10-minute because I'm only trying to be in the play for that long. Okay. If it's a day trade, I don't want to be here all day because if I'm here all day, something happened. And I'm going to talk about that tomorrow because if you stay in this game too long, you give the market a chance to trick you.
Okay.
If you watch price too long, it'll make you dizzy. Seriously. And I'm going to talk to you all about that tomorrow because there's something that they're doing to purposely trick us. That's why you hear me say I'm done for the day. Okay. But again, I don't want to jump ahead. But if you're specifically trying to make money in a day trade, you need to be in and out before they catch you with that money. Think about it like that, like a bank robbery.
That part.
Start the clock. In and out, get your money and go. Don't worry about what else is happening. So on the 10-minute time frame, let's look at Meta. On the 10-minute time frame, it bounced here, which we saw was the 800. Maybe we are going to get in calls, right? Maybe we're in calls here, right? We don't need much. And one thing I'm going to do is watch it at this EMA. I need to see how price responds when it gets to this EMA. I'm going to set an alert there because if Meta gets above 721.57, it is breaking the 10 and now headed back for an uptrend. Now, yeah, it still looks disgusting, but this is a good sign. Okay.
So you wouldn't actually enter that at when it hit that bottom discount level, thinking it's bouncing up. You would actually wait and use that EMA as like the entry point then, versus thinking it's bouncing off at the bottom. Is that what you're saying?
I would encourage you all to do that. Now,
Okay.
So
only because remember, these certain stocks are my kids. I know them,
yeah,
and
I
I'm
was just
looking at patterns. Say that again, Mark.
I was just going to add to this because on this 10-minute time frame, and this is, I guess, Neil, if you don't mind, I give them one quick homework assignment. I want you to Google a fish hook pattern and just post it in the channel or just read about it. That's exactly what we're looking at here, which is a bullish reversal. Literally about at 10 Central, what's at 11 Eastern. I dollar cost average one more time on my meta calls because of this same pattern that I'm looking at right now. Now, this in the same setup. Neil, can I show my screen for just 1 second?
Oh, Mark. Nah, yeah.
All right,
Really quickly, let me finish.
okay.
Let me finish answering her question.
Okay.
And then I'll stop sharing.
It's the same exact thing you got up. I just wanted to.
No, that's all good. I just don't want to get too far. The fish hook pattern is a thing, but to agree with what you said, yes, because this bounce, it could come here and bounce back down and keep going, right? But if we see it come and it breaks this 10 EMA, then that's more confirmation for maybe we're in the uptrend. So to answer your question, I can't see who that was that said that.
This is Jody.
Okay, hey, yeah.
Hey.
Oh,
Hey
so
there.
yes,
Yeah,
that's what I would wait on confirmation because we want to play this game from an investor standpoint. We don't want to rush it, and especially starting out. A lot of you all are starting your journey or in the middle of your journey. You can't lose by waiting on confirmation. So for me, yes, I see it. It wants to go back bullish to ensure that it's not going to do this and this, then yeah, I would wait until we can at least break that 10. And then the next step, I would just follow it up. If I was only using EMAs. Okay, let me stop sharing so Mark can show.
So yeah, just to piggyback off of what he's saying, just only using EMAs again. I just saw the bounce, and I also have the smart money concepts, which you guys will probably learn about later if you haven't already. So I noticed that it had some support, and it started to bounce back up towards that 10 EMA that King was just talking about. So with that fish hook pattern being present, it's starting to curve up. Now, still technically on the shorter time frame, it's in a downtrend, but King just showed you about working your way in, right? So from the 1 day, we see it's still up. We're just using that 10 EMA on the daily as a level of support. Now, here we go. I'm just going to jump to the 4 hour, right? That tells me each one of these candles is worth 4 hours. Still, it just has support. We haven't broken below the 50. We just got a little pushback coming in a little bit more to get more surgical. 65-minute time frame. Now here we are bearish because we have formed a death cross between the 10 and the 20. There's our 50, there's our 72, there's our 200, and our 800s all the way down here. So we're not fully bearish, but we do have a what's called a negative fair value gap, which is telling us that, hey, we just got a lot of resistance right now. It's going to be so hard for us to break it. Try to find a medium ground unless you have time to dollar cost average. Then I come in a little bit more, 10-minute, which is where we were. Each of these candles are worth 10 minutes apiece. And I'm watching the candle close here on the right-hand side. It tells me the timer, 5 minutes and 20 seconds. It'll close, and depending on what happens, it could possibly not go above the 10 or possibly come on right back down to that 800 EMA. So this is the part where you have to come in a little bit more to view the candles as they're moving towards those EMAs to like maybe the 2 minute or the 1 minute and see what's happening on the shorter time frames if you're day trading. But again, everything doesn't have to be a day trade, especially if you have time in the position. So in my particular situation, my option doesn't expire till April the 4th. I can afford the pullback and afford to dollar cost average because of what I saw on the longer time frame. Okay, so if you don't have a time that is a little bit longer than what you see, then you may not want to even stay in that particular trade for a long period of time. All right, because the EMAs are going to point you in the right direction of what floor to party on. Okay, and how to party. So I like how you put that too, King. But
No
that's all
problem.
I wanted to say on that, just to piggyback as an extra layer of confirmation of what he was telling us today. So thank you, King and Neil, both for your aspects on EMAs.
Yeah, because we didn't
So,
piggyback on top of piggyback on. He just took over, Neil. I'm sorry.
it's all right. It's all right. William, what's your question? And then I wanna answer Stephanie's question, and then I wanna respond to Lori.
I think there was a couple in the chat too.
Hey, what's up, guys? Sorry, I had to join late. I had a meeting earlier. But King, can you go back to that meta chart at the 10-minute real quick?
Yes, sir. Let me pull my screen back up to share with you. Which one was it? Here it is. Can you guys see that?
Yep.
Yep.
Perfect. So I noticed here, like, I do have real-time data, but if I do regular trading hours, the EMAs and the support levels change. And if I do extended trading hours, it's a whole different ball game here, right? So my question to you is, like, do you guys prefer extended hours? Is that giving you an extra edge? Like, how is that? Why do the data points change? And is there an edge to having it set to extended trading hours?
Well, in a simple answer, yes. I like extended trading hours because my whole point, the way I invest is watching price. So I want to always know what price is doing. Just that simple for me. I've never looked at the difference of the two because I'm personally not concerned. With this game, the more information, the better. Now, it may be a theory out there that conflicts that, but for me, my personal experience is yes, I'm going to keep on extended trading hours because if they are able to move it, why wouldn't I want to see that data?
That makes sense.
That's just my personal take on that. But yeah, and we're back on the 10-minute. So, like I said, one other thing, like Mark was saying about the fishhook pattern, remember, the market makers and the hedge funds know about those patterns. They create them. And they know that we know about them and we're watching them. So a lot of times what you'll see is a fake out. It'll look like a fish hook, but it may not, it may do something else. So waiting on confirmation here, unless like Mark, he has a further out position. So it doesn't matter. This is still a good buy at this price, right? He still averaged down. But back to Jody's question, for me, if we were waiting on calls for a day trade, yeah, we break the 10 on this 10-minute, then we have a short-term 10-minute upward bullish trend, however you want to put it, right? And I would try to play that for the next few candles or however many candles I can get out of it. Once I'm in the play, I go here, and I always refer to this as checking the traffic and checking the weather, right? Once you have a destination, you always, well, I do because I live in Florida and it could change in any minute. You check the traffic and you check the weather before you get in the car. Usually we put it in ways to see the best route, right? So we've decided on the destination. The destination is meta calls. We've decided that that's what we want to do. We're going for meta calls. So now we have to check the traffic and the weather on how we're going to go about executing those meta calls. Make sense? So we go to the lower time frames only to get a more clear picture of the I guess how the ride is going to go. Okay, and the entries and exits. I'm using those to figure out where to get on and where to get off. If that makes sense to everyone.
Yeah.
Yes.
Yeah.
Okay.
Yeah, perfect sense.
Cool, cool. I got a few.
All right. I'm gonna answer Stephanie's question. So she asked, should using the EMAs with their specific time frame determine the length of your option expiration date, or what's considered the best strategy or consideration for this? Now, me personally, I do not use the EMAs for expiration dates. King and Mark may do it a different way. And the only reason why I don't is because, so when it comes to the EMAs, what we have to understand is that the EMAs is to look back, right? It takes the average of what's happened, of what has happened in the past, right? It's not really telling you what's going to happen in the future, right? When it comes to determining my expiration, I usually base that off of, so let's say, for example, with coin, I do trade coin a lot. So I base my decisions on what's happening with Bitcoin or whatever news is happening with coin. And if it's positive news, then I'll get into a call. If it's negative news, then I'll get into a put. But I usually base my expirations off of that data. And I also base my expirations on the price of the contracts as well. So there are a handful of things that I do put in perspective before I actually execute on, or before I actually determine the expiration date. Okay.
Yeah, I think we had a couple questions in the chat.
So Lori, next week, I'm gonna go over in detail and explain and show you guys exactly how I have the stochastic candle set up on my chart, and I'll show you the settings and everything. But since we were on the topic of EMAs, I do want to show you guys this indicator, because I know King mentioned the 10, the 20. Right, so this one here, this EMA here. Right, and it gives you 10, the 20, the 50, the 100, and the 200. Okay. So if you want to take a screenshot, but you know, this is being recorded, so you can always just catch it during the, you know, when we get to this portion of the recording. But this is one of the EMAs that I use, and I'm sure my partners use them as well. All right.
We just turned off the 100.
Right. And so when I'm looking at that one, I just only use the 50 and the 200, because as King mentioned, if things are starting to fall below the 50, then we got to really start paying. All right.
Yeah, one more question. Catherine asks, do you have a good resource for familiarizing yourself with chart patterns like the fish hook pattern, head and shoulders? What's funny is we are going to go over chart patterns. I think that's week 2 or maybe 3. And we're going to show you some ways to kind of identify those. But and I mean nothing by this, but Google. I use Google so much because it's very simple at this point. We have so much data on that on Google. It's very simple. The question you have, somebody has probably had it in the past. So I would just Google popular chart patterns. I don't use them as often, but it's just something that I see because I've been seeing them so long that I just noticed. But I would Google whatever your question is about the specific chart pattern. Or see head and shoulders or the fish hook. Yeah, I would just Google it so that you would have all of the information.
And there's also a book called I don't know if you guys can see it, but is the only technical analysis. There we go. That's it. You're holding it upside down. It's upside down. There we go. The technical analysis book. It is the only technical analysis book you will ever need. This really has a lot of information in regards to chart patterns. But just to piggyback off of what King mentioned, we are going to be talking about common candlestick patterns next week. All right, so this is a great segue. First, we understood what's happening with the candles, and now we're going to start to really dissect on when those patterns are formed and what they actually mean as far as entry and exit points. Okay. So if we do not have any further questions, it is now 11:25 Eastern Standard Time. It is time to go, y'all.
Well, we're real quickly.
Yeah.
Before we get out of here, it look like you got a question.
Yeah. Somebody had a question?
I thought I saw Bobby about to raise his hand.
I do. I wanted to go back because I got kind of confused on the. So is it a 126-day EMA and a 130-day EMA?
Right. So there's a total of, so now based on the information that Will showed us, there's a total of 5 different EMAs.
Okay.
Right? So it's the 52 EMA, the 63 EMA, the 78 EMA, the 126, and the 130. Now those specific EMAs are beneficial to specific time frames. Okay.
Okay.
All right.
Now,
so yeah, so it's the 52 is the weekly, the 63 is the daily.
78 is the 5-minute.
Okay.
The 126 is the 65-minute, and the 130 is the 15-minute.
Okay. So I had them confused. That's what. Okay. Okay.
Just remember, that is a different strategy from how we typically use the EMAs.
Right.
Yeah. Well, that's the way I see it. I see from EMAs. I the other stuff I really can't see that easy, but well, I can with the different colored candlesticks because I have the straight set up. But far as when I'm just looking at a chart, I'm just basically looking at EMAs.
Cool.
But that's dope. If EMAs are your thing, and you're able to break them down from a different time frame perspective, then you will definitely benefit from this. And definitely look at that video and there are some other videos to follow that follow that video, which is definitely full of dope information. I can tell you that for sure. Because
I watched it a few times, but I just couldn't. I was trying to put it in context, and then when you went over, because you said you was gonna go over today, so when I listened to it again, I kind of got a more visual once you was going through it.
Okay, cool.
And I seen how you had your chart separated as far as color wise with your EMAs that go with the candles too.
Yeah, it's like swing trading for sure. You can trade just using the EMAs.
Yeah.
But
it'll print.
Yeah, for sure. Because you can plot levels of support and resistance and the direction of the trend. And if you're looking further out, take a look at Meta like we just did, or some of these other ones. Just turn on the EMAs and look at them from the daily. A lot of these stocks are in the uptrend. That's why I keep trying to tell you, I'm not a bear. You guys just see me day trading to kind of help my long-term positions. When I see it pulling back, I'm gonna go in there and try to lighten the blow for the day. But ultimately, most of these stocks are in the uptrend, especially the big ones. But if we real quickly, how are y'all feeling? How do y'all feel? This is day 2. How are y'all feeling about the information? How are you feeling about us? Not me, just only Neil and Mark. They the only ones that.
I want to know. How do you feel about me, baby? I want to know.
Yeah, questions, comments, concerns. You can keep your comments, but no.
So far, this day 2, you guys because I always see things differently, but you guys are painting the picture of how you need to look at the chart, how to use the information. So for me, can't speak for everybody else, but for me, I'm like, oh wow, that's how you do. That's why that. So it's starting to all come together for me. So I'm actually excited doing the rest of this course because I told myself while I'm in this mentorship, I'm not gonna trade or anything. I want to just study, get the information because like I told you, my king got beat up in January, so I just want to make sure I got everything right. So everything you're telling me, I'm writing my notes, I'm going over the information. It's like really coming together.
I love
So
to hear
love
that.
it.
That you actually take the time because it's learn how to load the gun and then shoot it. Don't do it the other way around. Go ahead. I think
just made me happy.
Say that again, Mark.
I said that just made me happy because there is power in patience, and you'll learn that whether you're day trading, swing trading, buying shares only, patience. What you say, Neil? Patience will pay you, or you will pay for patience.
That's it.
As a famous poet, Lil Baby once said, "We haven't even did it yet."
What?
We haven't even started. But I think Catherine has something, and then AC. No, mic just
No,
off.
I was just gonna say this has been great. A lot of light bulb moments for me. So thank you so much.
Okay, that's good to hear because sometimes I see your face and I'm like, is she happy?
Oh, so I'm very focused. I'm taking notes like our friend over here and
Okay.
learning a ton. So yeah, no, don't take my RBF as a bad sign.
You said it, not me.
Can I ask a question to everybody before you get to John? I'm gonna just do it anyway. Who all is this your first time ever trading anything? Can you just unmute and say me?
They're
Me.
not gonna do that.
Huh?
They're not gonna
Anybody?
tell us.
Me.
Okay.
Got
All right.
one
Okay. One is 1,000. That's good.
for sure.
Thank you.
Okay, go ahead, John.
And I was right about to touch on that real quickly because I've been trading with y'all for a little bit now, and it's just I think the value that I really get from this, and we ain't even got started yet, but the value I'm already seeing is that we literally have the three kings to confirm, you know what I'm saying, answer, whatever questions directly about whatever. I love the time that y'all take to answer these questions, but also the fact that we have three kings perspective to leverage is just so beautiful because there's so much nuance in what we're doing. You know what I'm saying? So I just want to thank y'all for that. I have another question, but just give me y'all flowers. You know what
I
I'm saying?
appreciate that, brother.
Yeah, that was one of the reasons we collaborated, because we all have common goals, common same denominator, but different styles of getting to the method, getting to the bag, and it's important that you all see all of that. And that's what I was trying to tell you yesterday. I want you all to do what feels good for you. There's no specific way. Everybody is different, right? I mean, there's some certain rules like the ones with mindset and stuff. Like I told y'all, we can't waver on. But I want you all to get a feel for all different styles, and this is why we did this. So that's good to hear. Great to hear, actually.
And
I got one question for y'all. Go ahead.
wait until week 3 when I start talking to you start talking to you guys about price points like entries and exit, because as King just mentioned, there are no rules outside of the mindset of this. Once you create the picture you are looking to see on your chart, and you have developed your strategy, not my strategy, not King's strategy, not Mark's strategies, but your own strategy. And once you realize, wait a second, this is it? No way, this is it. I can get in here and then exit here. Wait, what? It's a game changer. I'm telling you, it is a game changer. And a lot of us get confused about a lot of this stuff because the information can and will be overwhelming. But when you really step back and dissect one piece of it at a time, and then it's just like putting a puzzle together, right? Once it's all in the box, it looks like a huge mess. But once you lay it out and you start taking one piece at a time, starting with the corners, now you're working yourself in. And then once you put that last piece and you step back and you're like, wow, that's beautiful, right? And I'm telling you, and let me show you guys the last thing. And this is in regards to the indicators that I keep telling you guys that I really do dig into these indicators, right? Because look at how many indicators I've looked at during my trading journey. Like, look at this. And I really can sit here and tell you exactly what these do to my chart. Like, this is crazy, right?
Yeah.
Are the pieces to the puzzle that I'm creating, right? And I'm telling you, it's once you really sit back and you dissect this information, it is a game changer. All right.
That's a dope analogy. Notice Neil's analogy was about putting puzzles together with kids, and mine was about partying on rooftops. All different perspectives, guys.
Different walks of life, man.
Listen, guys, believe it or not, as I said, my boys are 5 and 7, and one of the reasons why I've learned to start really teaching from that perspective is because they will be trading.
Absolutely.
You know what I'm saying? So if they learn and understand this information now, and not only top of that, it's extremely important for them to learn this information now, because at some point, right now we're competing against bots and all kinds of different AIs and technology. So just imagine at their age what they're going to be competing with when it comes to the market, right? So
Absolutely.
yeah,
And I'll tell you, your children are always going to emulate what they see.
Yeah.
You know, I've been doing this for a while, and he's going to be 15 on the 24th of this month, and my 13-year-old, they buy the dips of Bitcoin, and they'll come home, they'll say, "Dad, did you see the chart on Bitcoin?" And guess what they're using? EMAs.
Yeah, for sure.
That's it. That's all I've taught them, and they're doing very well with their Bitcoin because they dollar cost average, they buy the dip, and they only use the 1 day time frame. In fact, my oldest son, he's in an investing club at school, and every Wednesday they meet and they traded gold last Wednesday, and the target was to make $2,300 on the trade. It's a forex thing or whatever. At any rate, he said that he bought into it and then it rejected at the top of I think like 2,100 and 2,200 something. Then he said when it pulled back a little bit, he dollar cost average bought more of it, and he told the teacher that he wanted to wait the next day. Long story short, based on the time frame he was watching it, that play was actually a $3,200 play because of his position. So I'm just saying, like, this stuff is not impossible, and you know, the way you break it down, this is the most simplest form that you can learn today. You guys got a beautiful gym learning about EMAs. Even though I love what William has shared with us yesterday, just keep it simple.
Yep.
Okay, keep it
And
simple.
let nephew know if he need Uncle King to store his keys for him. Or a seed phrase. Just in case he decides he loses them, you know, I got him.
Oh Lord, man, look, don't baby laugh, boy.
I think John was finishing up on another question.
Yeah.
I appreciate y'all. And this is unrelated to today, so apologize if this is something that we can cover later. But on a week like this week where we're receiving so much data, and we have positions with time and positions without time. Let's say I'm swinging something for a couple of weeks and just didn't realize that it was such a huge data week. Do you guys ever have weeks like that where you got some, like, near term positions and and then realize after the fact that it's a huge data week, and like, do you guys kind of ride things out? Is it kind of a feel thing, familiarity with what you're already in? Like, how do you guys manage those situations?
Well,
I'll go first.
we've had the luxury of seeing some of these cycles, huh?
I just said I'll go first. Okay.
Oh, I didn't hear you. You gotta be closer. You need to get your Mac together, brother. Mine's faster. I'm sorry. I'll be quiet. Go ahead.
I'll finish. Just started. Go ahead. Finish.
I don't know what I was gonna say now, man. No, it happens sometimes, but you guys want to really make sure, especially now with the leadership being so volatile, keep an eye on the news and the economic calendars because you don't want to be surprised. And I'm gonna tell you this: with everything is going on, we are all humans and we're built with intuition. If you feel like you should take your money out, just take it. If the storm clears and you were right, wrong, whatever, if cash is a position, if you remember, the name of the game is to make money. So if you take your money out of the market and then figure out what's what, if you were right or wrong or indifferent, the money is not at risk. So if you feel something, just take your money out and let the storm pass. And then you could always reposition. That's the thing about these stocks. They're going to move. They're going to always move. You can always catch them again. That's it. Go ahead, Neil. I can't hear you, man. Neil, you have the floor.
Need a new mic.
Hey, Neil.
He knew everything.
New mic, new computer.
I was trying to get it out, but the laughter came first. But so for me, I'm as King just mentioned, like I'm always telling people, yesterday's market is not today's market, right? Because of this administration and the information or the policies that the last administration put into place, and even the administration prior to that, well, it was the same administration, but nonetheless, you got to make sure you're keeping up with economic data because it does give you like a crystal ball as what's to come. And all of these major corporations and even some of the non-major corporations, they can react or they will react negatively or positively to this information, right? So it is extremely important that that you do keep yourself up to date with that information, right? And just as King said, listen, if you're up 100%, do you really need to be up 110 before you take the gains? Do you really need to wait till you reach 200% to take the gains?
If you're feeling doubt.
Right. You know what I'm saying? When in doubt, take it out.
Get out. All right, guys, let's
Oh,
end
wait,
on.
no, how you
Get
gonna
out,
skip
get
over
out.
me?
I'm sorry.
Let me
They're
give
gonna
my
talk about
perspective.
something
I know
else.
we gotta go. So for me, if it's a data day and I actually do jump in the trade, say earlier in the morning, let's just say we'll start with the worst case scenario. Let's say that the things aren't going the way that I wanted to go, right? I've been very hard headed before, but more recently, thanks to my brothers King and Neil, because we do influence each other. If the data starts negatively impacting the market, I will turn my phone off and leave the house, go to the gym. Because if I sit and watch the market after I've already had a bad situation and all these economic events are happening, then I'm going to fumble the bag. Okay. And I'll revenge trade and overtrade and keep dollar cost averaging if I have to, you don't want to get in that position. I don't say I do that all the time, but I'm just throwing it out there. All right. Now, on the flip side, it's a data day. I catch a trend, I snipe the bag, take my money, move on, go to another ticker, possibly that I like, that I'm familiar with, or just don't do anything. Just watch and help other people. That's what I do. But I always start preparing really for the next day, roughly around probably about 1 to 2, because I'll go pick my son up from school sometimes, 1 to 2 Central. So it'll be 2 to 3 you guys' time, right before power hour. And I'm starting to think about the next day. So I may grab a swing trade around that time. All right. Because again, everything don't have to be a day trade. And I'm usually thinking a couple weeks out, or I may think about what I covered in the live or what somebody asked me to look at or whatever, and then I execute. But I'm always thinking about the news. In fact, if I had this virtual background off, you would see that CNBC is going right now. I mean, it's not turned up loud, but it's just enough to where I can hear what's currently happening in the event that out of nowhere, Donald Trump says something, and then all of a sudden the market collapses, So that's just me.
All right.
Thank you, man.
Do we have any more comments? I saw a couple of mics turn on. but we didn't get-
I do have go ahead.
Oh, no, just gonna say, like, Neil, thank you for, I think when Will dropped the whole like SMA and EMAs, I think when he mentioned, the EMA chart, I think like my mindset sometimes is like, oh, something new. I need that. And so I think that's a point of like, I think for new traders like myself, the fact that, the FOMO of not knowing the new thing, the next best thing. So I think you explaining the SMA and EMA was like, oh no, I know this. Okay, it's just brought confirmation that, okay, I don't necessarily have to follow that. But like yesterday, I think when we ended off, it felt like, oh man, there's something new that I missed out on. And so I think you sharing today brought clarity. So thank you for that. So that was good.
You're most welcome. And that's exactly why I did that, because I want to make sure, as I mentioned, a lot of this information is going to be new to people. And not only will it be new to people, it's going to be extremely overwhelming, right? So I want to make sure, whether it's new, whether it's old, whether you use it, whether you don't use it, that you at least understand it, right? Because now once you understand it, now you can make that informed decision on whether or not you want to use it. So that's what's really important to me.
Yep, I think Archie was next.
Yep. Hey, I just had a quick question. I actually had two of them. So one of the things that I noticed today, as you were going through King, as you were showing your chart and Mark was showing his chart, my 800 EMA was looking nothing like you all's on Metas. As soon as I turned on the extended training hours, it matched up. Something as simple as like that tweak um, helped me to be able to match up to what you all were showing on your screens. Are there other things? Because that wasn't anything that was ever discussed in any of the content, Mark, from the everything. I can't remember the new name of it, but from the bundle.
Right.
That wasn't anything that was discussed in there. Are there any other like small things like that that we should be looking at or adding so that we can kind of follow what you all are doing? I find it beneficial for me to be able to take a look at you all screens, look at mine, and see if I'm seeing the same thing that you all are kind of visioning. And mine was just way, way off. And it was way off because of that one little setting.
Man, I gotta tell you real quick that because you touched on that with the whole real-time data. I remember, and these gentlemen can attest to it too, and some of you may have been there on that specific live that day where we're all trading and we're all making money, and my price points are completely different from everybody else's. And I'm like, what are you guys talking about? No, it's not right. When I tell you I was going crazy, but the beautiful part about it is that I was still successful, whether or not the information was the same or different from another person's information, right? So I think the key is whether or not your chart is showing something different from somebody else's chart, as long as you understand what's happening, that's probably the most important part. Now, of course, you want to make sure you have the most up-to-date information, absolutely, without a doubt. But I just had to share that with you guys because I understand how you feel exactly, because I lost my mind when I realized, like, wait a second, Nvidia is showing $1.30, and I'm in a put because I'm saying $1.30, but now it actually flipped and it's at $1.32, and everybody's in calls, and I'm like, what is going on here? So I definitely understand 100% on what you're speaking of.
So I wanted to ask, since he was talking about the ETB, the things that you will learn over the next 3 weeks and a couple of days are going to teach you so much. Try to stay in the box and soak in as much as you can from yesterday, today, tomorrow night, and then the next couple of weeks, one thing at a time. And I do honestly believe that you're going to have so much information that you will develop your strategy the way that you want it to be. But we're always going to find new things that we can, what's the word, tinker with on our chart setup. And I'm so glad and so happy that you were able to see those extended traded hours and how you could throw it on there. And just like Neil just explained, it's gonna be so much that you develop. And I just want to see you keep doing that. Unfortunately, I don't have anything else to share, like as far as material is concerned, because I haven't had time to prepare anything new other than what the devotion that we have for you guys as mentees. So, that's my 2 cents. Maybe the other guys can chime in on that to answer your question. But
So
yeah, just
is
soak it
it
all in.
is it beneficial for me to use still like the ETB and have like a setups off of that? Because I know like some indicators we haven't even touched on some of the indicators that are there. The EMA and the candles was beneficial for me today, like to see it and see it in action, see it kind of like you all show your screen. I can see like where it's touching, where it's not touching. Um, that's a good point, but like, should I just? I think right now what I'm probably going to do is just get rid of all of the other stuff and kind of work with just those content right now, just so I can kind of follow like what you all are showing and sharing and seeing how that does impact my decisions on things that I would or would not go into.
Right. So one suggestion I would do instead of deleting everything. Let
No,
me
I mean
go.
like not delete. I mean like save it as create a new one
Yeah,
with
that's what
that. Yeah.
I was gonna say that. Let me just in case somebody doesn't know how to do that, I'll share it real quick. I think this is the right button.
While he does that, I don't have anything else besides real-time data. You need that extended trading hours. Pretty much the stuff that we worked out. You shouldn't have much else different. The hard task is going to be trying to figure out what you did is, it's kind of like we call the mechanic and say, something wrong with my car. We're like, okay, well, bring it in so I can see it. Something wrong with it. It's like, I can't see your chart. So I can't compare what may be off just to give you a tip. But the tips are real-time data is imperative, and extended trading hours, like Neil says, so you can, long as you know what you're looking at to make your decisions. And one other thing, we got to be careful. There's a lot of information in this game. There's going to be a lot of it coming at you. Part of the game is dissecting the information, because if you add too much of it together at once, you're going to be risky, because now you're all over the place. So Mark is going to show you all how to put the previous ones in the layout.
Right. So what you do, you'll have whatever your chart name is, right? And you'll click the little drop down that says manage layouts and create new layout. It's going to be blank. Name it whatever you want. I'm going to name it Ace. So at any rate, so you can name it, and that way, once we're covering things, if you decide you want to add an indicator, for example, like what Neil covered, EMA 10, 20, 50, 100, 200, or whatever, you can just add it to something new. All right. And then go from there.
That's what I did.
All right. So that's really for anybody new. I know most of you guys are pretty seasoned a little bit here, so just want to put that out there. And how do I stop sharing? There we go. All right, guys. I think
yeah, it's time to go. I asked if you guys had any more questions, comments, concerns, but I only wanted to hear the good stuff. All these questions at the end. You guys had all day to do that. No, it's all good, guys. I can't wait to tap in with y'all tomorrow night. And that's it.
I'm here. Thank you, guys.
All right. Thanks, everybody.
Thank you. It was
you.
really valuable. I really appreciate it. Thanks, Don.
Good.
Thank you. It was great today.
Thank you.
Problem.
Oh, I'm talking. I didn't realize I was on
stop recording.
I was trying to tell Jody about
Stop recording.
Oh.